All right. Hey, what's up, everyone? DayTraderRockStar here, and I had to get on the mic here. This is an impromptu video, and right out of nowhere. I'm going doing my research here. It's Sunday afternoon, 1:30, here at the office at the studio, and I'm going over review. I'm going to do like 3 videos today, and I'm doing my review video right now. I'm just doing my research from it, and I'm coming to it, and I'm saying, you know what? I need to get on the mic and just express some of the emotions I go through when I'm doing charting here. It's my job. So every Sunday when you go back and you look at charts and you say, "Wow, man, look at that! That worked out perfect. Everything seemed to work out perfect." And because of that, you kind of another light bulb goes off, and you said, "You know what? That just for those out there maybe that didn't get that first light bulb, but this is like my third or fourth light bulb always going off. That it constantly reinforces why I stick to this system, this type of methodology or criteria to get me into these stocks, because it works over and over again. And I just want to get on here because I'm just going over these stocks, and I say, let's just share this. Let's just share all this stuff with everyone. We're all trying to get to the same goal here. So AIG, man, we're very bullish on AIG this week, but we knew the financials were pulled back. Everything was setting up. You had the oversold stochastics, you had the 50-period moving average, but it wasn't moving. So people start to get worried, and to tell you, it kind of tests your faith in your overall confidence in your, the way you pick stocks and criteria. You said, well, this should hold up here. This should hold up. And each day it doesn't move. You get a little more concerned and you get a little more questionable about why you're, taking that position. And that's normal. It's absolutely normal, because this is, if you do this every day of your, this is your career, then, these things are the ones that really pop up into your head, because this is, there's no one that you're working for. This is, you better be doing it right, or you're not going to be doing it at all. So anyway, so I remember that not moving, and all of a sudden we look back here on the end of the end of the week here, and you look how perfect the setup was. Everything was set up. There was a big explosion, and it just proved that each time these setups work over and over again. Even they even had a trend line under here. So the multiple indicator, high probability setup type of deals really work. The AIG here, and these are this is off the 10 for 1,000 watch list last week. So these are a lot of the stocks that were on that watch list, like PepsiCo. And PepsiCo, again, another stock that we continue to, if you have your focus list out there and you're looking at stocks and you're saying, wow, this is a very organized stock. Each time it pulled, the stochastics pulled back. It pulled back to a trend line. It bounced each time that these multiple indicators lined up. So hence, I might as well use it as a indicator down here on the pullback. So seeing the channel being formed, I said, well, we gotta watch for the trade to the upside here. And because we had a tightening of the stochastics, or what I call a wedge pattern in the stochastics, is one of my favorite patterns. And I'm going to show you a few of these. It's a wedge pattern, just pretty much like a coiling down to an oversold level. And I put the wedge pattern in there because you're going to get a series of lower lows, and in some cases, you're going to be flat here. But either way, you want that just coiled spring down to the end here, and that usually gets everything tight. And when you have that breakout of that pattern, it usually is accompanied by the breakout of the pattern down here. But most likely, because you're down here in the momentum, that the pattern, most likely the move is going to be to the upside. Most likely, All right, so that's just one of that's not a foolproof indicator, but it gives you a directional trade. That's where you want to start to determine the directional trade. If you're up here and you're pinned up here, you're not really gaining any benefit from the stochastics anymore. Unless, and you won't even be able to time it because it's really embedded. But until you start to see other indicators lining up with you, it might be on a trend line, then you can start to really kind of, what I say, quote, bet a little more on that trade. Anyway, great setup, falling channel, wedge in stochastics, break to the upside, PepsiCo. And again, these are stocks that we put on last week's watch list because of these, and now we're looking back and seeing why, or why, if they did or didn't work out. All right, Budweiser, great example. Budweiser was a nice pullback. I think we picked it up here one of these days. And what I did was, always talked about, I think on the watch list, is having a range. Because the stock Budweiser's, the way it trades, it gaps down, it gaps up. There's always a gap involved in the opening price. you have to give yourself some, it's a position trade. You have to become confident that if you buy it down in the lower area here where all these indicators line up, there's a good shot that you're going to get a bounce up. There's a really good shot. That's why you have to not really concern yourself with the exact entry, but give yourself a little room and say, all right, this is my entry area. Anytime in here, I don't care if it moves down, I gotta believe in this trade. Sometimes it doesn't, and what happens is you start to not worry about individual prices and starting to really micromanage your positions, but you're saying, all right, I got a little bigger picture, and this is a perfect pattern. Let me grab it down here, and I know it's going to move up there, and even the target might not, might just be a section. But the real benefit here is we're getting from here, we're getting in our trade from here. Oh, sorry about that. I still have, we're getting from here to here on the trade. At least that's our minimum. That's what we're getting. It's almost like they're paying us to take this position. But anyway, so then after that is all is gravy, right? So it's just, you got to continue to go back. The reason I jumped on here just out of a flash of the moment is because you look back and you see different areas in the stock where it reacts. And then you say there's a method to it. There's a trend line. So why not continue or only trade the higher probability setups where you have the trend lines, you have the moving average, you have especially the two trend lines that cross over is my favorite pattern. It's like a downward sloping channel with a larger uptrend, and the stochastics line up perfectly. It's like if I could just trade that, and that's what we're trying to slowly do, is develop a focus list of quality stocks where we get to know, you trade them over and over, you get to know how they feel. And all of a sudden, you're just taking these positions when they come around. We alert, you get the alerts and stuff, and you just take the lower trend lines. You don't micromanage. You don't take that stress level in with you, because most likely these are going to work out. And as you see, they usually do work out. And people might come back and say, well, what if the market was going down? It would work the same way. It would work because the market was going down. There would be rising channels that you would short into. There would be the same exact patterns, but in a downtrending market, and we'll start to see the same trend lines playing out as the pattern develops. And you just have to mentally just switch there. But basically, if you're just trading, waiting for the signals to come up, you have nothing to worry about, because you're not being scared. You're not just taking a trade for anything. Anyway, so I'm gonna get carried away here. Amelie was another good one. This is a little fast little review. Like, I just jumped on the mic here for a second. I still have so much more research to do tonight. But again, this was one of the best bets for last week, which I usually call the kick-ass trade of the week, which that's going to come back. Then I was like, you know what? Maybe people don't appreciate the kick-ass term. But then I'm like, you know what? It definitely sounds better than best bet. So kick-ass, whenever you hear kick-ass and hear best bet, it's usually the same thing. All right? And there's a section on the site which there is a kick-ass trade, and I'm going to try to bring you one kick-ass trade a week, meaning out of the whole watch list, this is the highest probability setup. So this one probably has all the indicators, the best setup, and that'll be the highest probability setup. Will be labeled as the kick-ass trade of the week, and that way, hey, maybe you don't have, you can't get into a lot of stocks, and you just want to trade the kick-ass trade, which gives you the best probability of a profit. That's great. That's what it should be used for. And again, it would be like a situation where you see an established trend line, you're down here, the 200 period moving average, the oversold stochastics, this is a high probability area right here, and that's where I want to be in. Any place here, it doesn't. I don't have the mic like I want to just get it when it touches the 200 period moving average. It doesn't always happen that way, There's these trend lines are thrown in here, like we're sitting on our desk in our underwear here, and and we're throwing trend lines in all over the place, and you can't just measure those out. So you want to get you want to give yourself a little leeway in the stock price here. You don't want to just make sure you're hitting a certain line. What if you miss it by 2 cents? The thing takes off like this, you'd be jumping out the window. So anyway, again, just a little of my my philosophy on that. So that was a couple of their Sethlon was, might as well go into this email or watch list or review right here. Sethlon was on the watch list last week, And again, it was just basically, I don't even see what the targets and triggers were. But when the watch list goes out, you actually, what you'll see is, you'll see these buy trigger and target areas. Small buy trigger says buy trigger. What does it say here? Scale in. Oh, I mean at that level, right at this level was a scale in. So again, remember this went out 5 days ago. So I guess it was on the drop down right here off the 50-period moving average. So again, we consolidated a little, and now we're starting to move up. But you know, the truth is, this whole area becomes that higher probability area. You know, you're not trying to micro. It's like, oh, it didn't hold the 50-period moving average. I gotta get out of here. You know, no. You give yourself a little time. You can let it come down a little. You know, let the stock play out a bit. I would say most people I know who are, well, you know, I would say, not to go and scare people out there, I would say there's definitely more people that do not make it in trading that make it. You know, I'll just leave it at that. I won't throw some really scary numbers at you. But because they're very indecisive in their trading, they don't have a trading plan, they don't have a system, they don't have a methodology. You know, they're following people's coattails and they're doing whatever they're going to do. And, you know, if they put the hard work in and finally realize some of the certainalities, I don't even know if that's a word, certain aspects of the market repeat themselves, you know, they would you know, increase their probability of making a profit tremendously. It's just, you know, being successful at least. So I mean, that's why, you know, this is great stuff right now. You know, because if any bit of this comes down and, you know, seeps in there, you know, down the road you'll be saying, hey, that DayTraderRockStar, shit, he knew what he was talking about. Well, we all have to go through our, you know, we all have to take that journey. COF here, Capital One Financial Corp. All right, beautiful pattern. We're going to look for the breakout of the upside. The reason is, you know, we definitely see that wedge pattern. You know, I always tell you, I do not like pennant formations because they could break up or down. What I would rather have is buying off a lower wedge pattern channel line. Absolutely, 100%, you have to buy this level. You know, and look at even here when the candlestick reversed and closed above it. And closing candlesticks and the trend lines seem to work out. So there's definitely a you know, basis to the theory of, you know, well, we're not going to go into black boxes yet. Let's see, COF. Eastman Kodak, I just want to go over that one fast. That's a good consolidation, starting to show stochastics, positive divergence. EK, you know, it's pulling back, sideways consolidation. I was even saying that there's probably a good chance this one kind of flushes out because such a cheap stock, believe it or not, just like it gets a lot of amateur investors involved in it. Yeah, because it's cheap, and what it does is it'll flush out a little, and half these people are like, oh, God, I'm out of here. And, you know, you have to understand that, you know, you got to be in it for a reason. You can't be in it just for the pattern. You got to at least believe in the company. It's a little. I mean, I understand pattern trading, but I wouldn't be in a just a pattern unless I knew something about a stock that was under $4. Well, anyway, so expect a little further bullish move down and then a breakout. That would correspond with the stochastic setup here too. GT, Goodyear tires. That looks interesting on it. That was, you know, definitely something we paid attention to this past week. And you can see the nice downward trend line. So there's a long trend line that goes out all the way out here, comes all the way down to $11. There's probably a good shot we start to test that one more time. So, you know, I do like the position here. You know, it's not my favorite, but, you know, the $9 area down here, you gotta make a decision there, I think. But hopefully you don't have to. Hopefully this thing starts to move up. It almost looks like it is. You know, actually we actually had an okay day on Friday. OC, again, I'm going to just continue to pound in this. You know, it's so great to see the patterns, know the patterns, what the patterns mean, what the stochastics mean, waiting for the setups, the first retracements, secondary entries. You know, these little things. Even this one, coiling. You know, it's almost like being a deer hunter. You know, when you go out in the woods the first time, it's all like, you know, you don't even know what the hell's going on out there. And then over the years, you start to understand everything. You start to feel the wind on, you know where the wind is all the time, and you know how to, what the hell am I talking about? Hunting and trading. Anyway, what I'm trying to say is, The pullback here is just a textbook entry, and if you just took textbook entries instead of worried about being right or wrong in the market, you know, having the emotions get the most of you, then you're fine. So that's why we put this on as a best bet, and you can see what happened from it. We just exploded right up. Target 29. We're probably going to head higher, but what really came into play was the coiling or the channel in the stochastics, because again, any type of pattern in stochastics really represents a pattern breakout, and you usually see a big extended move, and that usually corresponds again with the price. So that was a great pullback. This is called a channel, you know, channel breakout, and the first retracement, or actually the second retracement, down towards the 20-period moving average. But again, a lot of people will say, well, I got to wait until the 20-period moving average is being touched. No, you don't. Please don't. You'll miss half your trades. Take it, you know, watch the stochastics even more and make sure they're oversold. And if they're oversold, you're probably close, if not a day or a few days away from a reversal in the stock here. As long as there's other indicators like the lower trend line and the upper trend line all around here. It looks great. OC. OI, and we took OC off. OI, though, we did not take off because, look at this, another great example of, you know, a nice inverted head and shoulders pattern. Upward trend line, pushing up against the thing, but the stochastics were coming down. We didn't make lower lows, which is a diversion in itself. And then we got to break up very fast. We have plenty of room in the stochastics to keep the momentum going. This one looks absolutely fantastic for Monday or Tuesday. You know, it does. I mean, we are right at the top of the trend line, and it definitely could pull back. But, you know, we'll have to see. I think it's probably going to, you know, be an interesting trade around here. I hope we have the momentum just to break through here. OI, which looks like we do. You know, we closed very strong. RMD. Beautiful channel here. Pull back in the stochastics, turned back up, everything worked out fine. You know, we're looking for, the only reason we got in here is because we're looking for that breakout here, because we do, you know, I was looking at the time of the stochastic, we got it rejected, we came back down, but no one, the stochastics pulled back to an oversold level. We were holding off for recent lows, so I knew that was a positive indicator of a move back up, so not really worried about it. And also known as a trend line here, so this whole area was okay, and you know, would actually continue that bullish uptrend and push up to the trend line. So not getting too scared here, understanding the pullback, the retest. Now everything actually looks good for that major breakout. So maybe RMD, this is RMD, maybe a big breakout this week on that. Now, got a lot of other stocks here, Wells Fargo, WFC, that was a good. Again, this is where I left off jumping on the mic here, and I said, I got to jump on the mic. I just looked at this one. I came full circle now. And I'm like, you know, it's a beautiful thing when you're able to spot things and they work out. All right? But you have to remember, there's going to be an area, a time, you know, when a trend will change, and what you're trying to do is trying to monitor, you know, just wait for those indicators to set up. So you have to wait for a trend line to come up. If just the stochastics are oversold, sometimes that's just not a good enough indicator. You need sometimes to have underlying indicators. Anyway, Jesus. My phone is going off the hook here. WFC. So that's what started me to get on here. Just a nice pullback. You know, I definitely was calling out Wells Fargo, and I was like, you know, it's great here. Everything telling us to buy. I mean, it consolidated a few days, and he was like, you know, that's where I started off. I said, don't get too overly concerned with the motions of your stock each day. If you're looking at a pattern here and you're trading the pattern, you have to give it a little time to work into its pattern, and you know, and have confidence in your multiple indicators, you know, and that's just going to help you out in the long run. So anyway, that was a little fast little video. I'm going to get back to working on the 10 for 1,000 watch list, which will be released at one point today, and this is Sunday. So hope you enjoyed that little touch of I don't know, touch of knowledge and a little review there. All right, take care, everyone.